names here. I think these must be Clyde's groupies.
I think so. So friends, welcome. My name is Stephen Fetter. I manage the United Learning Program for the General Counsel Office, and it's a delight once again to be here with you and to welcome you into, gosh, I don't think I've even kept track of how many we've done, but yet another iteration of our congregational finances during the pandemic. This has become quite a gig. I don't think we've had any other webinar series last this long with this much regularity, and yet here we've already got 150 people in the Zoom room and another, what, 17 or 18 on YouTube, and we know it's just going to grow. So thanks for joining us. Great to have you here. As usual, I'm going to watch the chat, and so I will collect and curate the questions as they come in so that Eric and Clyde don't have to actually read the chat themselves. And we'll pause along the way to for me to have a chance to tell them what you've said. So use the chat. Use the chat as your tool to communicate with us. Don't feel like you have to read it. If it's flying by too fast, don't panic. It's my job to read it, and I will do my best to kind of hold up the representative comments that come in. You're certainly welcome to read it as public, but if you have to choose between reading the chat and listening to Eric or Clyde, you know where to go. They're much more important than the chat. Otherwise, we're going to mute the mics so that we don't interrupt each other, and we'll turn things over to Eric to let us get going. Eric, over to you. And I just muted you with everybody else, so you have to.
And I just unmuted, so that's fine.
Good show.
Okay, folks. Good evening. April 28th. This is the fourth one of 2021, and we're getting pretty close to 20, I think, overall. Anyway, as we kick things off, I, of course, just want to do a quick land acknowledgement. Tonight, Angelica's to the north of us a little bit. I'm not quite sure of her particulars, but Clyde and I are certainly broadcasting from the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples. And Toronto is now home to many diverse First Nations, Inuit, and Métis peoples. This Toronto acknowledges that it is covered by Treaty 13, signed with the Mississaugas of the Credit, and the Williams Treaties, signed with multiple Mississaugas and Chippewa bands. So something just always to remind ourselves that we're in it together with folks who were here long before us. So I'm just seeing my system seems a little slow. I apologize. So the next slide is, of course, the new creed. I always include it. It's certainly the mission statement that I work to about us being called to be church here together on the administrative side of things. But we are certainly supporting everyone as we celebrate God's presence and live with respect in creation and to love and serve others. And I won't read the whole thing tonight till I know my buttons are working here. So again, we've added a quick commercial. The reason we do all of this administration, which is funded from assessment, is the mission and service side, and to make as much money as possible available for granting and for programming and for the people who directly work with all the various stakeholders that we support through the Mission and Service Fund. So just to say again, your generosity matters, and hopefully you're seeing some of the new material coming out of our philanthropy area, a really exciting Mother's Day proposal out there as well, inviting participation. So what we're going to cover tonight, the Qs and Kers, or however you pronounce that, have been extended to September, assuming that the budget passes the House of Commons. We'll have some information on that, as much as there is. the team pay, the actual rollout is going to begin, and Angelica will bring us up to date on that. Have some very timely reporting on some general counsel executive decisions that just happened on the weekend. And then, as promised, we're going to be talking about assessment, about what the plans are for the next year or so, and how things are working, and frankly, how, in my opinion, I'm biased, the assessment system is working the way it's supposed to. So when congregations have less financial capacity, as they have had this year, that gets reflected in the assessment. And of course, your questions and so on. So first of all, I'll just touch on the General Counsel executive decisions. These code numbers are just the way they're labeled for governance purposes. I'll get into it in some detail, but basically, there was a decision to complete the transition to the new funding model. That's the way we collect assessment, and getting it 100% consistent and uniform across the country, to do that by January 2023 for that year. GS 103 refinements, these are just, I mean, we're in our third year of this, so we've know what kind of headaches we're causing for you, and what kinds of, so we've got some recommendations, some administrative changes that have now been approved. And then finally, there were other things they decided, by the way. These are the ones that I thought treasurers would care most about. GS 104, the business around temporarily giving you room to make decisions as a board and not have annual meetings and board approvals and stuff. That date was June 30th. With the current COVID situation, it's been extended now to December 31st. Okay, switching to Q's news, a few things. There is a limited exception to the deadline. If you missed a filing deadline, it's on their website. It lists some specific situations. Frankly, for most of you on this webinar, it won't be helpful. You need to have had a technical glitch that the CRA feels some responsibility for. So if there was a system outage or something, you might have a case. But you can check the details. There's about 4 or 5 bullets there. The next filing deadline is May 20th for period 9. And May 9th is the first day to apply for period 15. As we've reported before, the current program runs to June 30th, but I'll have some more details now. The federal budget basically says, has in it to run through September 25th with some wriggle room to extend it to November. And the subsidy rates are going to decrease further starting in July. And at least as of today, the CEBA loan deadline remains the same. So just for the Qs, again, most of you are registered and filing regularly and all of that. But September 25th, there's going to be, I guess, at least 2, that might even be 3 4-week periods, however many that is. And these are the current periods and the comparatives that are being used. So what I've been explaining to people, and even for my own use, is that you want to have that record of your revenues from March 2000, from March 2000 onward, because there will be times where you use even the 2020 numbers. And when it comes to figuring all this out, the answer is trust the spreadsheet. It's set up, it's really, really quite intuitive. It tells you, what numbers to put in as soon as you pick what period you're reporting for. And I think we'll leave that at that. The CERS program, we've had a couple of questions on that, so I just wanted to mention it. If you had tenants, the idea was that they could go and apply for this themselves and take you right out of it. The original program was a real pain in the butt in terms of paperwork in that regard. It's also open to you as an owner And again, if you own the qualifying property, there's a few things. If you happen to have any property taxes because your building isn't 100% dedicated to religion, or in particular property insurance or carrying costs, the interest on commercial mortgages. That doesn't apply to very many people at all, but I have had a couple of questions this week, so I flag it for you.
Can you remind us what the CERS is, please?
You know what? Canadian Emergency Rent Subsidy, I think, is the acronym. And it's specifically for, as I say, if you have tenants who had huge revenue shortfalls, you could direct them to this program. And for churches, it's a rather more narrow situation where you could potentially claim really the property insurance and general insurance as much as anything. Okay, with that, and I guess I'll just quickly say what I won't be covering.
Let me just back up for a minute, because there's only one question about Qs, but we might as well pick it up before we move on. Sure. And that was, is investment income included in the revenue calculation?
Okay, I don't know if Clyde wants to comment. Not if it's on account of capital, like if it's in your investment account and not coming over. But if you have amounts like GIC interest or something showing up in your bank account as part of your regular procedure, then yes.
I would agree with you on that. If it's realized gain, then you would use it. If you leave it there to grow the investment, no.
Yeah. So, Clyde, when you say realized gain, you mean that in the sense of it actually coming out of the investment account, though?
That's right.
As opposed to the investment manager just selling a stock and buying another one.
No, it's where it comes into your control.
That's it.
Yeah.
Okay.
And the other thing with that is I've had questions about it where they thought that if they drew down some of the investment, that they would have to include that. Mm-hmm. The answer is no, you don't.
Yeah, that's not even. Yeah, a lot of us think in cash terms.
Yeah.
But that's not even revenue for an accountant.
No, you counted that as revenue years ago when you put it into the investment, so you don't count it a second time.
That's it. Okay. So with that, Angelica, you can tell me when to advance the slides.
Okay, well, thank you. Good evening, everybody. And your favorite topic of the night, Team Pay by ADP. So I'm just going to talk about the rollout that is already currently happening, but I'll just going to go through this slide, which we've seen before. The phase 1 has been completed. The backend has been upgraded.
Okay,
so by now,
can you back up just a minute and remind us what Team Pay is? Again, I think most people will know because they're using it, but let's not use technical terms without defining them.
Right. So it's a new payroll platform by ADP.
Perfect. Thank you.
Okay. So the phase 1 was the update of the back end of the platform, and most all of the pastoral charges have been upgraded, and you should already by now have a new ID and a new password. And if you don't, then please ensure that you send an email to ADP at the email address that is provided there. If you have any questions right now, you can send them to the pastoral charge payroll service email address. So that's for phase 1, which is Team Pay Live, the back end of the system, which will give you only a bit of access to just reports and activity reports and T4s, not the whole maggot of the platform. So next slide. So phase 2, the rollout of activation of the actual platform. So a communication was sent out back in April the 12th, just to all the treasurers and authorized contacts to give them a high level overview of what was going to happen throughout the next few months. So the first batch to be activated is going to consist of 319 pastoral charges with 3 different groupings, and that started April 19th, and it will run through the summer and possibly till the end of September or December. We'll see how late it runs in. All of the run as is payrolls is going to remain status quo. You're not going to hear from ADP until such time there is a workable solution. We are still continuing to work on this piece of process in terms of the run as is. So please be patient, and we'll continue to update you on any of the solutions that come up. So the process of activation for those groupings will be as follow. You are going to receive a welcome email from ADP to all those authorized contacts with a pre-recorded webinar on the invitation on the email, as well as an invitation to a live training session. So you're going to get that
Before you keep going, again, technical term, somebody's asking, what is a run as is payroll?
Those run as is payroll is the ones that you make changes either January and February, one time throughout the year only. And it runs as is every single month.
Okay, so it runs automatically without
automatically.
So that's the way we've all been so far.
Yeah, we have about 1,200 of the pastoral charges that are called run as is, meaning it runs every month without the interference of someone going into the system.
Thank you.
So, as I was saying, for those who are going to be activated and they are not run as is, you are going to be receiving an email from ADP. And in that email, you're going to have a pre-recorded webinar and an invitation to a live training session. That is going to be sent to you just a week prior to the live training session. Once you attend the live training session, that is also going to be pre-recorded, and the email is going to be sent out again to you. Following that, you're going to get a specialist who is going to contact you one-on-one to actually activate the system. So again, there's 3 components, and I just want to make sure we're very clear on this piece. You're going to get an email, an invitation from ADP telling you that you are going to be invited to a live training session, whether you can choose in the morning or in the afternoon. You will choose what session you are going to attend. You will attend that session. That's going to be pre-recorded. It's also going to be sent to you. These are all for you to be familiar with the TeamPay platform and understand what some of those features are. Following that, you're going to get a one-to-one with an implementation specialist who is going to contact you and actually walk you through all of the features again and activate the system for you. Any questions so far?
Yeah, just a couple. So Carrie's saying, I didn't get an email, didn't get one in November either. Who do I talk to?
So send an email to ADP to get you an ID and password.
Okay, to ADP. And what would the address be, please?
So it's just right on the first slide.
Okay.
CanadaSBS@adp.com.
And just one clarification there. Carrie, I think it was Carrie, needs to make sure that she is the authorized
That's right.
contact, because that's who ADP can deal with.
Excellent. Thank you. So I've just put that into the chat in both places so that you actually have a live email address there that you can cut and paste.
That's
Next
right.
question. Is there a way to find out when we're going to be transferring to this second phase? Which list we're on? And a week's notice isn't a whole lot. Is there any chance of getting more notice than that?
Unfortunately not. ADP has the science behind who they choose to go with for the groupings. It's going to depend on the pay date. So you can imagine that there are pay dates that are bi-weekly, monthly, semi-monthly. So ADP will just give you a week lieu time.
So what happens if we happen to be away that week?
So you will receive that email.
Mm-hmm.
And then followed by the following week after the live training session is complete, you're going to receive an email with that training session for you to have.
And what I'm saying is, what happens if you happen to be out of town that week? Are you up the creek then? What happens if you can't meet the appointment they're giving you because it's just it comes up so fast. Will they do it again? Will you?
Yes,
put
this
the
is
bottom of the
going to,
list?
the training sessions are going to continue. If you miss one, just let us know which batch you're in, because it's going to be batches of
Okay.
30 or 40. So just a quick email either to ADP service or to the pastoral charge service team, and we can definitely connect you with a training session that is going to be forthcoming.
Any chance that the training sessions could happen after hours, like weekends or after 5 p.m.? Some of these folks have day jobs.
Yeah, it's standard by ADP. They've tried to put two, one at 10 and one at 2. But again, these are going to be pre-recorded, and we will be more than happy to send them to you if you're not able to attend.
Yeah,
Okay.
I think folks, I've actually had more questions about, do I have to go at all because I know team pay from somewhere else? That isn't the case for many of our treasurers, but folks will make sure that either the live event, the recording, and then of course you get the one-on-one as well. So that combination is really intended to be like belt and suspenders. Like we're actually trying to do overkill up front, improve the comfort level.
Great.
So we've
a couple more questions, Angelica, and then we'll go on. So if we didn't get the welcome email, does that mean that we can assume we're not part of that initial 319 pastoral charges?
You will. No, that doesn't mean that you're not part of it. They are doing in batches of 30 and 40. So do expect an email in the next couple of months.
It'll come eventually. Okay.
It will come.
And here's one congregation that has 2 people, one the administrator, the other the treasurer, both have access to team pay. Who gets the email? Do you know? Or will they both?
The primary contact will.
Good.
But you can both register if you get it.
I think we'll carry on at this point. There's a couple of more specific questions that you may answer on another slide. So I'll just hold them and you carry on.
Okay, so just a final, we have a page site on our UCC site where all the information related to phase 1 and phase 2 can be found. And if you require some assistance from our payroll team, just please feel free to send an email. What else? Go on. Okay, so this is just to recap so we understand the phase 1, where everybody had the system upgraded. You're only going to have access to view your reports. So if you have not been activated, you're not going to have anything else but to just view reports. Again, this Team Pay is a cloud-based system that allows you for easy access via wherever you are, desktop, laptop, tablet. Okay, so you are going to continue to provide your changes, your payroll changes via phone or fax. If you have not been activated, you continue to stay status quo. You continue to use your existing payroll form to do any of the changes. Next slide. If you have been activated, these are the benefits of your Team Pay. You're going to have access to view payroll schedule reports, make permanent changes, calculate, check reports, approve payrolls, self-service for all your employees. And one of the new features that has been implemented now is that you can update your contact information yourself. You no longer will have to send an email to ADP. And this is called the self-serve contact management feature. So that's a huge bonus where it's going to be up-to-date information. You can go in and change who you want as a primary, secondary, or third backup for your payrolls. You're also going to be able to have access to provide access, I should say, control on how you provide access, whether it's a system administrator, whether you want to give someone access only to input, whether you want to give access only to view reports. As an administrator, you are going to be able to provide different types of access, and you have control over your payroll 24/7. And I think that's it.
Okay.
Any questions?
Couple of questions, but they're small ones at this point. So if you've got a run as is payroll right now and you want to add a payment for doing a wedding or something, how does that work?
Well, then you still will use the existing payroll form, either call in or fax the information.
Great. And somebody's surprised to find that even in phase 1, employees can access their own pay stubs. Didn't know that was possible. How do we do that?
Send us an email and we'll send you a guide.
Okay. So when we send an email, where do we send it, Angelica?
Pastoral, the last slide, you have the.
It's at the bottom.
At the bottom. Is it, or is it?
I don't see it on here. No. Oh,
It's at the bottom of this slide, but it's
okay.
There you go.
Slide.
Pastoral charge payroll at United. It's right there.
Yeah, and you have it in the chat already, Steve. So
Okay, good. Thank you. Those are the
And
questions
again,
I'm
you
seeing.
know, and if you have any other questions, please feel free to send them either to me. I think people know me already, Angelica Benalcazar.
Okay,
great.
thank you, Angelica.
You're
Angelica,
welcome. Thank you.
Thank you. Again, people are naturally uncomfortable or asking questions about something new, but being able to control your destiny here is, let alone people know what I think about facts. You know, once we get past this initial changeover, just being able to do it whenever you want instead of sitting on hold is going to be beautiful. Okay, just on that front, hope to say the same thing about Church Hub. It is going to be where across the country we keep all our contacts. It's intended to be our overall database. So if you're inputting your roles, including your ADP administrator, on Church Hub, that's going to be how we make sure we have the most current mailing lists. It's just pretty standard way of the future these days that you have fewer mistakes if you don't do any keying, if the person themselves is putting in the information. So that's the idea. And we have treasurers. I know there's probably still some to go. I know we have hundreds already enrolled, and everyone should have a user account as a treasurer. We do have a help desk function available, but most of you, I don't think, need the kind of support that, for example, to be blunt, ministers did. Sorry, Steve. And again, really, really important that you update your roles because that's, it is going to be garbage in, garbage out. It's also very common for, again, there's an administrator or overall church admin that has, multiple and broader views. Mm-hmm. The treasurer tends to focus on the assessment and the statistics and so on. But one thing, if we'd had more time and not had COVID, I probably would have rolled this out slower and absolutely nailed some things. But we've been behaving a little bit like the government too, in terms of getting something out there and then making changes. And I appreciate that can be frustrating, but that's driven by COVID. That's driven by wanting to get as much functionality out as quickly as possible. Okay, I don't know if there are any questions. We had a question session just a few minutes.
There's a couple of questions coming up about this, and it really is all about these different roles at Church Hub. So several people are saying, how do I know who the treasurer, who the administrator is of my Church Hub? We don't seem to have one in my congregation. I've got treasurer access, but nobody knows who the administrator is. This is just part of early rollout, right? Ask around your congregation, but beyond that, who would they contact in your office, Eric, if they need to update the kind of administrator of Church Hub for their congregation?
Well, they could send a note to myself or to Susan Jackson, S. Jackson, okay. United-Church. As a practical matter, the church admin would typically be the main contact that we had, where all communication went. So it might, in smaller places, it could be, it might have even been the minister. But you should all, I hate to say this, but you should almost be able to guess. Like if you can't guess who the admin is, then by all means fire us an email and we'll tell you what we have. There's only a few, literally like I think 15 or 20 out of 2,000 where we don't have one. So we'll be able to tell you.
Sure. So send an email to Eric or send one to me, and we'll get it to the right person who can respond to you.
Yeah. Don't send it to Stephen only because he just sends it to me and he just creates keystrokes for himself.
There you go.
Yeah. Susan
Question whose email they have handy.
Yeah.
So there was, last time we talked about this, Eric, there were problems. There was some kind of glitch and people couldn't print off their statistics. Has that been fixed yet?
Yeah, there's been some immediate fixes. You still, I think, need to complete the submission, but there are some interim fixes that I understand folks found very helpful. This is one of these things where I get this stuff verbally, right? I don't necessarily
have
it hands-on.
Yep.
Okay, I will keep going.
Please do.
We're going to talk a little bit about statistics because statistics drive, a lot of our processes, drive a lot of our decisions. And I've always liked this various quotes by Mark Twain about statistics. But this should be a tickler for all of you. Anyone who does their statistics this year will probably generate a reduction in assessment for next year. So if you aren't motivated for any other reason, that should be real. like literally, I think that would be what I just said should be true 99.8% of the time. There could be something odd out there, but in any case, so annual statistics, I'm just going to go through a few bullet points and then link this back to assessment, which is what we promised for tonight. Again, federal grant revenue, the Qs, CHUs, the funny accounting for SIBO, whatever, none of that impacts your assessment. And that's why, even though we're assessing on the basis of revenue, certain of your revenues will have gone down. Even if they were replaced by this, you won't be assessed on it. We have this, we've had this question so often, I keep putting it in about the putting something down for your average weekly attendance. Just put the best number you have. If you have some mechanism, I did a Zoom call the other day where I tried to, just from the pictures, see how many couples were on, in addition to the 40 or so that were on listed as Zooming. No one's going to hold you accountable for that stat for 2020, I guarantee it.
Well, and nobody's assessment is dependent on assessment anymore, on attendance anymore. It used to be that factored in some presbyteries, but it's.
Oh no, I do have a slide later on how goofy things were, with all due respect to those presbyteries. Again, statistics and in particular revenues are the driving force behind assessment from going forward. If you don't do your assessment, we typically we frankly carry over old numbers, and those old numbers in a COVID year are going to be higher. So and don't worry about an AGM. Some places seem to have a requirement that the AGM be done before statistics are submitted. I can tell you my church doesn't even know, or my home church doesn't even know statistics are submitted. So, if there is something different, a change, you can talk to Susan Jackson in the office, and we can make adjustments. But generally, I wouldn't worry about the AGM aspect of this at all. The thing we get the most questions about, and that we're trying to come up with a better answer on, is how to handle investment income. And question A4F is all investment income, including realized and unrealized gains. That's basically the amount that your portfolio went up or down, and that would be net of any withdrawals or additions. A4G is only unrealized market gains, because we've been trying to figure out how to properly within the spirit of the rules, assess investment income. And I'll talk about that a little later. And CEBA loan reporting, again, this is getting kind of granular. The grant portion, if you booked some grant, as we've discussed in the past, goes in A4I, and the loan portion itself goes in A6, and there's a property question as well. We're going to streamline these things. There are too many things to explain here. It's very meticulous, and Susan's done a great job of trying to make a complex ask more comprehensible. But we're going to need to simplify and dumb it down further. So again, I repeat, filing your statistics will reduce your 2022 assessment. I don't know if there are any questions on that. Otherwise, I'll dive into the assessment.
Sure. So a couple of questions. Just for clarification, we signed up to pay a specific annual amount. Can we still get this reduction? You're in the specific amount that you signed up for would mean that you chose what was called the freeze option 3 years ago. So that specific amount has applied now for 2019, 2020, and 2021. So you were scheduled to go to target, whatever that is, in 2022. And I'll be speaking to that a bit more. But yes, for 2022, no matter what, your assessment will change. Great, thank you. Second question, back in 2017, we were told by the national office that the assessment would be based on net income and not unrealized investment income. Will the annual assessments be based on the overall value of an asset, such as investments, or only the realized income that's derived from investments?
Let me answer that more fully later. The proposal is to use a smoothing approach and therefore calculate an assessment amount from the investment balance. And I'll take you through that in some detail. Okay. But this really hit home with us in 2018 and 2019, where in 2018, many folks would have had a negative overall investment result. And in 2019, not uncommon to see double-digit returns. So we don't think it makes sense to have your assessment jump up and down that markedly. So what was approved on the weekend and what will go to General Counsel for ratification is a proposal to simplify and smooth out investment accounting so that basically so that anyone can do it.
Great. Well, I think you should probably carry on and get into the nitty-gritty of that, because that's
okay. So here we go. This will be a quick recap. Again, some of you might not have been around for the 3 or 4 years. We've gone through a profound change in funding model, and it's intended to be more consistent and transparent around what funds what. Revenue was identified as the fairest measure of ability to pay. It's sensitive to smaller rural congregations that might not have investments, might not have rental income. It's externally verifiable. And further to the question, we just had a little, there was a 3-year freeze option on increases, which was intended to recognize that applying a more uniform system created some odd situations depending on what the history was with the presbytery. We've got a bunch of stuff here that I list for you if you want to go back and look. The YouTube with Alexa Gilmore was from 2016. Frankly, we've stuck to the plan quite remarkably well. The refinements I'm proposing, I wish I'd thought of a few years ago, but they reflect some learning over the last couple of years. There's a 1-page version, there's a 17-page version, and the links are there for you. I'm not going to play them tonight. What we were telling people then and now, annual statistics reporting more important than ever. Correct email contact information is more important than ever. mission and service giving is just as important as ever. And all of this is, learning as we go and trying to have a consistent system that's very transparent.
Okay, so let's just back up for a minute. What's the difference between assessment and mission and service?
Really? Okay.
Just make sure everybody's clear and on the same page about that.
Yeah. No. Okay. Well, assessment is, for lack of a better word, the dues that every congregation pays that help fund the governance and shared services, help fund region operations, help fund general council operations, and whether it's accounting, computer, pastoral relation support, all those kinds of things. I call it governance and shared services.
Sure.
Mission and service is the voluntary giving at the congregation level. Sometimes it's an allocation from budget. Quite often it's a pass-through from the givings of individuals. And all of that goes to our granting and programming, whether it's in globally around the world, whether it's indigenous, whether it's outreach, whether it's refugee support staff in general council, all those things that are a part of mission and service.
I think that's, I don't think we can say that often enough. And those of us who live this all the time have it embedded in our brains, but lots of the people in the pews of my congregation couldn't tell you the difference. And, we who come on these webinars need to be able to explain that to the people in our pews. So thank you for doing that. I appreciate it.
Well, thank you, Steve. I need the reminder sometimes because I'm too close to it. Okay, moving along. So year 3, this is what we said originally. Accessible revenue doesn't include. We intentionally didn't want it to be a disincentive to things. So asset sales or bequests or capital campaigns. And it also doesn't include any revenue that you report raised for outward purposes. So, a lot of us did refugee programs in recent years, or M&S, or it could be that you designate certain monies to local outreach, a food bank or whatever. Those you should be, in any national church campaign or emergency, relief situations, all that should be recorded in your statistics as revenue raised for outward purposes, and we subtract that. And I would think most folks have seen that by now on the assessment statements. So again, fundraising revenue needed to be, not that the churches do this much, but if you had a fundraising dinner with that raised $5,000 and had $2,000 of net costs, we'd say, report that as 3. And UCW and rental income, we don't want to get into cost accounting, but what we've said there is report it on a net basis. So if you have a parking lot with a parking lot administrator, you can, subtract out that piece. But these are the elements that most folks, I think, by now know. And we'll talk about the refinements in a second. So to Steve's point, here are a couple of pictures of how the funding of the broader church works. And I can't stress this enough. I work for congregations. I'm paid by congregations, and I'm funded by assessment. But I work for the folks or I try to support the folks that do the mission and granting. So what we're constantly reminding people is whatever's available for the broader church rises and falls with the financial health of congregations. So here's again some history for any new folks. The assessment is now done in one place. The denomination does it, but it's sort of on behalf of the regions as well. There's one formula instead of over 30, literally 30 different formulas, because we had 13 conferences with differing formulas, and then we had the 89 presbyteries underneath. So there were all kinds of variations. This model generates a considerable amount of sharing across regions, and it does help fund the general council office. So again, we had a 3-year provision for those facing large increases. The amount moves with how congregations are doing. And right now, I would say during COVID, it's doing exactly what it's supposed to do. So there's less revenue generated, frankly, and that's something that, you know, the broader church has to right size or downsize in response, you know, once you know, COVID is over. And the 3-year transition provision, again, veteran treasurers will know they've been looking at sometimes scary numbers for a few years now. But when you file your 2020 statistics, you'll see that you'll probably see a revenue drop, and you'll probably see that target assessment number coming down. So this is how assessment works now. It comes from congregations, it funds governance and shared services. It's split across some support for the Indigenous church, which is governed, is aspiring to more and more autonomy in its governance. There's a portion shared equally across the 16 regions, and then there's the amount that funds the General Council Office shared services. So getting to the changes, the one change, the GS stands for General Secretary, that's who proposes it in our governance, the idea was that any further changes should be fully implemented in 2022, with the recognition that there have been 3 years notice and the increase has been limited and so on. However, with the, you know, no one predicted COVID, and as a result, we think for fairness purposes, you know, we do have, you know, most of our regions are going to be at target in 2022 post-COVID. That there needs to be a mechanism to complete the transition to this funding model. But so 2 things: if you happen to be looking at an increase, if that increase is less than $500, it will be implemented fully in 2022. If it's a larger gap, that amount will be split. Whatever the gap is will be split with 50% of the increase happening in 2022 and the balance in 2023. And the whole idea here is you know, is really based on fairness and getting to the new, consistent, and more transparent model. The next proposal talked about some administrative and some smoothing and stuff, and I'll get into that in a bit more detail in just a second. Okay, so if you're at target already, if that means that if your assessment amount, and this is just under half of congregations, if you're at target already, your assessment amount is calculated from your statistics and changes a bit each year. If your revenue went up, your assessment might go up. If your revenue went down, it goes down. In 2022, or I'm sorry, in this past year, your revenue probably went down. That's what we're seeing on aggregate for sure. Mm-hmm. And in a very rare cases do we see revenues actually go up at a pastoral charge level. You know, foregoing rental, maybe didn't get the same donations, that kind of thing. So that means that your assessment, if you're at target, goes down just by definition. And your 2023 assessment might go up if you get a bounce back in revenues, if your givings go back up or if your rent or whatever. But the point being that the assessment model is doing what it's supposed to be doing in terms of being sensitive to circumstance. If you're not at target, okay, and the person who asked, who said that they had a level assessment that they'd chosen, they would have chosen a 3-year transition. Again, with the COVID impacts, the increase that you're looking at is almost certainly smaller than it was a year ago. And again, this is the whole idea of the model. So if you're moving to target, for most regions, assessment overall will decrease. Increases for the regions that historically assessed at a lower level, remembering now that we're trying to get to current. So the best way for me to explain it here is this. You'll see the numbers here. On average, and we've looked at the 1,000 or so congregations that have already reported, and we're anticipating that a revenue drop, COVID-related, might be 15 to 20%. Might be in the, you'll know your own circumstance by now. And this of course excludes all the Qs and Qs and all that stuff. So my way of looking at it is COVID is bringing the target closer. Overall, the assessment that we told people when we added up everyone's target assessment was going to add up to a big number, 13.478 million there. But we know it's going to be way less than that when the statistics come in. So I'm working right now with numbers that are out of date, and I'm estimating. But if there's like right now, if there's a 17% drop on average, then the assessment doesn't go up for anybody. Now, averages mask a whole bunch of things, but the whole idea is that you should be able to look at your own assessment statement once you've filed, and I would expect to see it going down or be less than it was a year ago when you submitted your statistics. And here's where I'm sharing the kind of information just to give you a sense. This is by region, and the first column is how much is being billed in assessment to each region, and regions vary in size, they vary in financial capacity. So this again is part of the overall design of sharing across the system. But so if you look over on the far right-hand side, you'll see a potential percentage increases in assessment. Well, if assessment goes down 20%, if the target goes down 20%, then it's only those 3 or 4 in the middle, specifically regions 9, 10, 11, and 13, that could still be looking at fairly significant assessment amounts. And that's why we've chosen to spread those over 2 years, but why we've also chosen, out of fairness to everybody else, to get, to complete the transition. We're also proposing, as I mentioned earlier, the $500 threshold and a 50% catch-up. So the numbers that you see here, the 2 columns, 2023 and 2022, are a year out of date. They're going to change as you file your statistics, and they're going to come down. So I'm going to stop there for a second because I'm going to move to a more administrative conversation. But what you should have heard there is that the assessment, we're looking to complete the transition to target assessment by January 2023. And that for those of you who are still looking at increases, that'll be spread over 2 years.
Okay. So you've been talking about kind of big picture and trends. The couple of questions that have come in are about little questions and exceptions, which is interesting. And I'm not quite sure whether that's because the big pictures and trends are just so far beyond what we're thinking about that it's hard to even capture them, or whether it's just also obvious that we don't need to worry. But maybe the folks online can set me straight, and the more questions will come in as I chatter.
Sure,
but
Steve,
a couple of
hit me with a couple of the smaller ones, and let's see if I can even answer them.
Sure. So here's one from Margaret. We rent a space to a play school. We enter their entire rent payment as revenue. We don't make any adjustment for their proportion of utility expenses. Should we be doing that?
And my answer is no, and I'll tell you why. We don't, like, if you hired a full-time custodian at night to look after a night tenant or something, then you could have, then there's an argument. We don't want, we're hoping that in the spirit of keeping things simple, we don't get into a competition around cost allocation and who has the best accountant. So, it's certainly fair what you just said, but we don't want to be creating either work nor gaming the system. So the intent, certainly in the example you described, was to report the revenue gross, the rental revenue. If there's a compelling reason for you to adjust it, you could either check with us or even make a note in your statistics.
And really, that's the nature of the other two questions in front of me too. They're all about difference between gross and net, and how do we deal with these expenses things. So rent received to pay principal and interest on mortgage. Is that just a direct in and out because we're paying the principal and interest?
Principal isn't. You see, this is where you get into it.
Yeah, exactly.
Principal isn't even an expense. It is a cash outlay, but in accounting terms, but more to the point, it's not revenue anyway.
Well, the rent that you come in then goes to service your mortgage, and they're saying so it's in and out, so we shouldn't be calling it revenue. But I think that is gaming the system.
Yes. Yeah. The real question is, should I be treated differently if I have debt? So far the answer is no. But I'm interested in simplifying the system to make it less work for everyone. We're still learning as we go.
Yeah.
But the idea, like if there is an interest cost, that's something you've decided to incur. The fact that that's helped you generate revenue, isn't something that we've factored into the model thus far.
Sure. So, and Fred, I think that probably addresses your question too. So somebody else is asking about this new phase-in process. So they didn't quite capture it the first time you went around. The idea that, if you're within $500 of your target, it'll take full effect in 2022. But if the target's further away, can you say it again?
Sure. Maybe I'll just give an example. So if your assessment is $2,000 currently, and you're paying and this is normally where you've been paying $2,000 for the last 3 years as part of the freeze option, but you've been getting reports that that tell you that your target number is, just for argument's sake, 3,200. So two things are going to happen when you submit your stats. That 3,200 number is probably going to reduce somewhat because your revenue was lower. And let's just say your calculated number is now 2,800 once you submit your statistics and we calculate it. That would be split in two years. So your assessment for 2022 would go up to $2,400, and your assessment for 2023 would go up to the $2,800 or whatever the new calculated target is. But everybody would be at the same fair, consistent place at the beginning of 2023.
That's great. Thank you. So I hope that's clear. There were a couple of questions about maybe catch-up meant we had to pay the whole amount, but we had 2 years to pay it. But no, what you're saying is that the increase is going to be transitioned in more slowly. That's helpful.
That's right. And there isn't an arrears. So now I'll move to the admin suggestions here. So, and this has to do, like most of you hopefully are in a going concern mindset. A lot of the questions and challenges we've had are where there are changes. So if a congregation is closing or amalgamating or something, the assessment is really a contribution to the broader church from the resources. So we recommended, and this was approved, the same rules that many presbyteries have used for years, which is the full assessment is to be collected for any year of partial operation. And we're also recommending that the CRA wind-up date is the basis for how long assessments will be owing. So all this means is sometimes there'll be an assessment amount as part of your final disbursements. That's what both of those means. We also, because we use year-old data, we've been adding together in the case of an amalgamation, we've been adding the two parties together and saying that's your total assessment. That's not really fair because in an amalgamation you don't normally get 2 + 2 = 4. You might get it might equal 3.5 or something. So what we've done is we're saying we want some administrative latitude to talk to the people and say, hey, what's your budget for the year? What do you expect? And let's agree this number, and then the regular process can take place. So that's the admin suggestions there. A key one, and people were asking about the treatment of investment income. So this was approved. It is going to be referred to the General Council for ratification. But the whole idea of having, say, zero investment income in one year and double digits in another creates all kinds of challenges around trying to administer it and be fair. So what has been proposed, and I consulted quite a number of large investment holding churches on this, is to have an inferred number that is calculated from the investment balance reported at the end of the year. And what we're saying is 25 basis points, so 1/4%, be levied each year. And the idea here is that, again, that would be a predictable number. There might be some years where a congregation doesn't even achieve the notional gain, but there will be many years where they achieve much more. And again, what we've got some business rules. We're suggesting that the first 100,000 be exempt. And the whole idea here ultimately is that it's so easily, first of all, it's a much easier number to report, and it's also a much easier number to verify. We could literally use CRA stats and so on. So just to show you, this is maybe a complicated chart, but what in short it says is that there are about 1,150 pastoral charges that have over $100,000 in investments reported. There are 929, that orange highlighted number there towards the bottom, that have assets reported of less than 100,000. And we're suggesting that those not be assessed, and that the 25 basis points apply to basically 100,000 and up. This is a complicated slide, but I'm just sharing it in the interest of transparency. There literally are places that have millions of dollars, and certainly there are lots of places that have hundreds of thousands of dollars, but there are also lots of places that have nothing at all. And the model is intended to be sensitive to each of those points.
Now, there would be churches who have investments that have conditions on them. You can only disperse the interest. You can't disperse the principal because it came from the sale of the manse is the most common one. Is there any impact of those kinds of conditions on your model?
So far, again, we're trying to keep it simple and consistent. So far, the one exception that we've identified is cemetery funds, because they are restricted. Not only are they restricted, but even by law, they're governed by a different statute, the Cemetery Act in each province. So the idea would be that, yes, certain of these monies are less flexible than others, but the idea, again, is trying to be consistent and simple and fair. And as I launch into some questions here, I'm sure we will have questions. I've listed this as the stretch admin goal for assessment. You know it in advance. You know how that number got there, and not only that, but you'll even know before when certain church decisions are made. We really want to try to get to where this is a pre-authorized annual thing that comes out of your bank account in the same way that PAR goes into your bank account, or that other payments might come out of your bank account automatically. And we're aiming for no surprises and less admin for all. But here's the thing I'm also hoping, and this is where people might say I'm dreaming, and we collectively think we're getting and providing value to each other. So that might be the dreamer part of me, but that's my goal. And I think I have questions now. Clyde, you're getting an easy night so far.
So
You're right, and it's easy to go.
not seeing a lot of questions at this point. So friends, now's the time. Put your questions in here. I mean, I think there's a few questions about the detail of how that assessment on investments is going to be calculated, and maybe once we see it on our church hub page or wherever we'll find it, it'll be a little more obvious to us.
Mm-hmm. Yeah, the idea, again, if I just use my own church for an example, in a strong investment year, the church, my church would earn more than the target amount, and therefore not pay an assessment on all the gains.
Mm-hmm.
And we've already been sort of doing this a little bit with the whole notion of unrealized gains. We basically realized, no pun intended, that there was no way to get that reported properly or be able to track it well. Mm-hmm. So the overall principle is basically, again, continues to be for those who have greater wealth, and there's an inferred ability to pay. And I appreciate that's very glib and easy to say. We've also gotten used to whatever our expense structure is, and we've gotten used to whatever our revenues to pay for it are. But again, assessment is literally 4.5% of revenues, one way or the other, and that's way less than most other denominations. That's the best I can say.
So, is the amount of dues on the investments 4.5% of dividends plus 0.25% of investment capital?
No, it will be one calculation. We considered, for example, having multiple years of balances to smooth that out as well. But administratively, that's asking too much of treasurers and of our head office staff. So we think the simplest way will be whatever the year-end balance is. So for example, the 2020 year-end balance that you're reporting now, a portion of your assessment would be 0.0025 times that.
Okay. So people are wondering, how can we be assessed on investment income which we don't realize?
Again, it's intended to be administratively doable, and also be consistent with the whole idea of those who have more being able to contribute somewhat more to the whole. But it's a fair question. It's a fair question. You do not realize this money in cash. In lots of cases, my own church, for example, transfers over for budget support an amount based on 4.5%. So it doesn't matter what they make on investments; they're transferring over 4.5%.
And the other just increases the value of the assessment.
Yeah,
yeah.
And that transfer isn't counted because it's not revenue; it's still part of the overall church books.
Mm-hmm.
So we're happy to look at specific exceptions and concerns, and again, this will need to be need to be ratified. But the rationale, to be honest, folks, I wish I'd thought of this 3 years ago, because when I bounced this off people, everyone says it's just way more sensible to have a number that you can predict year in and year out.
Mhm. So these are proposals that are going to go to a full general council in July 2022. Is that what?
No, there is no general council in July 2022.
Right.
There is a recall of the 43rd general council this fall.
Right.
And it'll be presented there for ratification. It is being recommended by the general council executive.
Yep. Okay. I'm not seeing any other questions we need to bring here, Eric, so carry on.
Okay. So folks, the usual, the contacts and so on. I'm going to make sure Clyde gets more action next time up. But here, for 4 questions on assessment, any assessment related questions, we do have an assessment email query. I think it's probably on here. Yes, it is, assessments@unitedchurch.ca. Or if you have specific questions about what you heard tonight, you could ask, you could send stuff to me directly, because it's very much a learning process. What we're trying to do here is apply the learnings of the first few years, and continually driven by the notion that it's all based on we're all in this together, and any work of the broader church has to rise or fall with congregational capacity. So I've got a few slides at the end that'll be included in your package, but that's what I have for tonight. And just thanks to everyone. I hope that's been helpful. It's hot off the press news. As I say, these decisions from the executive were literally made on the weekend.
Okay.
Eric, I'd like to make one question for you. In the calculations for the assessment based on the investments, that's going to be done behind the scenes based on the statistics we report. Am I right? Or do we have to do the multiplication of the numbers?
No, you don't need to do anything. We'll just it'll be based on the financial investment numbers you report on your own financial statements and in the statistics. And frankly, the verification, I hate to say that we have to do some of that, but the verification I want to use is the CRA.
Yeah.
So are there other government issues, government grants and so on? You mentioned at the beginning that the queue is being extended to September as long as the budget passes. Anything provincially that we should be naming?
I haven't, there's been a lot of small announcements, but I haven't seen anything that's jumped out at me provincially in any province. I do have a service that reports what happens in each province. Now, if anyone has heard to the contrary, I mean, there was the Alberta program. There was some very limited, more concert hall type places in Ontario for closure impacts, and the ones we've talked about before. I think Manitoba had one that churches accessed. But right now, I'm not aware of any that's open for granting at this moment.
When do we need to start paying back the federal loan?
Oh, gee, remind me. I think, is it the end of, it's a one-shot deal. Clyde, is it at the end of December? Is it December 2022?
I think that's when it has to be paid by.
Yeah.
You can make installment payments along the way, I believe.
Mm-hmm. Yeah. Oh, you can pay it off today if you want, but
yeah.
Why would you is another question. One other thing maybe I'll mention to folks, part of the admin suggestion, I think it was a bullet and I didn't read it out loud, but one of the things we've played with is if assessment amounts are problematic, one thing we could do is convert them to the emergency support type loan that we had. I mean, a business would do that in a second. I can do that with a pencil. You send me an email, and we just relabel an account receivable into a loan, basically. So that is one of the ways that as we're still coming out of COVID, that we could certainly consider. I know it sounds a bit artificial, but if it buys some peace of mind for any congregations, that's a real plus.
Mm-hmm. Good. What do you know about the 3 paid sick leaves 3 paid days of sick leave that were announced today by the Ontario government? That would cover us as employers, presumably, if we're not already offering sick days.
Well, yes and no. First of all, it's Ontario only, obviously, so I'll just make that point. But our restorative care program already provides for 10 days.
Mm-hmm.
So the extra 3 doesn't really, and then you've got the, if you qualify, you've got the up to 6 months, right? So our sick leave program is already way better or richer, whatever you want to say, than anything they're talking about amongst the politicians.
Of course, nothing is finalized yet. There was just that announcement that came out.
No, it was announced today, but there's nothing in it for us except for the remote possibility that we could claim back, for 3 days, and the administration and even the ethics of that are dubious. We have a very good short-term sick plan in place, so we don't need to worry about it.
Sure. Another question about this assessment on investments. Somebody's saying here, proceeds from the sale of our manse are invested in a separate investment. Earnings from this account are designated to pay the minister's housing and are entered as such. Does that change how they would sort of contribute to our assessment burden?
And the short answer is no.
Okay.
Again, there is the provision, the $100,000 rule, but the whole idea is that to the extent that folks have resources that to be blunt, others don't, we try to factor that into the assessment.
Okay. The UCC bridge loan that you offered to us, does it still have to be repaid by September 2021, or has that been extended?
Haven't extended it yet, but I think I've told you repeatedly that we would. It actually is, the program was intended to be most operational once the queues ended, and we all thought that would end a long time ago.
Yes.
So let me just say that it will be extended for sure, and the window for applying for it will be extended too.
Okay, good. Thank you. Last kick of the can, folks. I'm not seeing any other questions here that have a kind of national context, but if there's anything you'd like to ask, now's your chance, and otherwise it's a feeling to me like we're drawing to a close.
Okay, well, again, folks, thank you for being a treasurer. I used to say a year ago that we're in the same boat and trying to do this analogy about COVID being in the same boat, and I recanted on that. But when it comes to running, trying to collectively lead the church on financial matters, we are in the same boat. Whether you're in a region or in Toronto or a local congregation, our fortunes follow each other, and we need to support each other every way we can. So thank you again for being a treasurer.
It's a huge amount of work, and none of us signed on for being a treasurer in a pandemic. Thank you. Thank you, friends. It's been a great evening. Thank you for your questions and for your attention. I want to remind you that we'll be back again at the end of May. Gee, I don't have that date handy. Let me see if I can find it quickly.
26th.
26th. It'll be the last Wednesday of May anyway. So look to join us again.
Yeah, and Steve, if I can just interject too, I don't think we've said exactly what we'd cover on that one, or did we?
I don't think so.
I
Yes.
got a two-sentence blurb from you, Eric, but
Yeah.
you're always welcome to change it.
Yeah, no, but I'm just saying, invite any suggestions too. We've covered a lot of ground. We focused very much on the government stuff, but if there's any particular area, just let us know.
Sure. Let me see what we advertised. May 26th, what every treasurer should have learned or have in place from COVID.
Okay.
There's been
well,
major upgrades and changes impacting treasurers. Here's where we recap each element from payroll to CRA to online portals to online stewardship.
I said that.
You did.
Okay.
I can hardly wait to see what you're going to do now.
Well, you know what? We try to deliver to what we said, so let's see what happens.
I love it.
Okay, folks. Well,
Thank you, friends. Blessings
thank you.
to you.